One, two, one, two, one, two, hallelujah. All right, so guys, thank you very much. Welcome to this live stream. Today is the second of June, 2026, and the time is currently 4:46 a.m. It's very early in the morning, and welcome to this challenge. So, if you are watching this video, today being the 2nd of June 2026, uh, I've been doing more of a forex funds drive for the project that we're having for the church, but I've decided not to call it a fund drive anymore, but to call it a challenge, right? So we're having a challenge, and let me call this part one of the challenge. In this challenge, you're looking for to raise, you want to raise more than uh, more than 5,000 USD. You want to raise that amount more than 5,000 USD. Um, by August 20th. Want to raise more than around 5,000 USD by the 20th of August. And this amount of money we are going to use to purchase that instruments. So this is going to be challenge one. I'll be doing these challenges maybe weekly. I might not be able to do it daily, but weekly. Na Mungu akinisaidia maybe I can do daily challenges. So I'll see how to go about it. But I'm looking forward to do it maybe on a daily basis if possible. I'll do it on a daily basis. Um, I'll do it on a daily basis if it's going to be possible. Every other morning, I'll be doing it. Um, yeah, on a daily basis. I'll be doing it, maybe giving you progress, but most importantly, how I want you to partner with me in this. Number one, um, if you can, if you can trade with us in this setup that I'm giving, if you can trade, if you're a forex trader and you want to be part of it, the profits that you get from your trading journey, you can actually just share to my number. You can share something on WhatsApp. This is my WhatsApp number. You can share something on WhatsApp. Uniambie blah blah blah. I have seen the challenge. I want to be part of the challenge. How can I be part of the challenge? Then I'll guide you, right? So actually, just text me on WhatsApp and tell me how you want to be part of this challenge, either by direct giving, by trading. Then we trade as a community with you. Then the money we make together, put it here in this basket and everything, right? So that's how it's going to be. It's early in the morning. Make sure also you grab a cup of coffee as you're trading. But nevertheless, let's start. This challenge is less of words but more of actions. I'll be focusing a lot on analyzing these markets together with you guys, so you can see where we are heading, and where we are, and what are some of the things that we expect towards this challenge, and everything like that. So, being a new month, I'm going to start over. I've cleared all the charts because I want to start over again, and also marking the first day of the challenge. I want to start over again. Now, I use a very nice strategy. I call it market mechanics. It's a combination of a price action and ICT. Um, and ICT concepts. So let me start from DXY. Okay, this is a pair that I normally start analyzing because I'm able to tell and see where the dollar actually is lying, right? So I'm going to do it with you together. I'm hoping you're going to have some good time of us analyzing this particular market. Now, I want us to go together. Marking key levels, I'll teach you how to mark key levels, or rather how I'll show you how I mark my key levels and how I understand my market from a higher time frame all the way to a lower time frame. We call it the top-down analysis. Remember, from the weekly time frame, I only come here once because it's the start of the month. I'll not be coming here every other day. No, these actually will carry me like throughout the month. So it's just like more of setting a foundation for the month. If you come here to the weekly time frame, realize that from over here, I don't know where was it. This was on January last year, more than 1.5 years ago. Price uh, gave us this bearish momentum to this case. Then there was a liquidity grab here. Now price has come back to this particular zone, something like that, right? If you've been trading for some time, you'll be able to see that anytime there is a liquidity sweep, there's going to be a liquidity sweep here. Let us mark the liquidity sweep. There was a liquidity sweep over here. Then what's our interest? We are looking at the leg that swept the liquidity, which is this particular leg over here. That's the leg that swept the liquidity. And we had an order block right about where the price actually is resting at, that order block there. You can see on this particular leg, if maybe I can expand. Um, yeah, like that. Also, the price closed above, just come to react on this, something like an order block. So I want us to form an idea from this weekly perspective where practically might be heading to. So there's a liquidity sweep over here. It is acceptance above the level. Price come back to test this demand zone like that. So what I'm trying to look at this particular market is overall price might be able to push to this level. All right, ship this liquidity. But at the same time, uh, we have this um, zone over here. But if I'm trying to look at this particular momentum, I strongly feel price might come to this zone ultimately. Ultimately, if you ask me, right? Because you can see last week price tried to fill this gap, and you can see the pattern price gave us. But yes, still yet, on your market, you normally just react on the market. Still yet, you may see price coming back to sweep this liquidity. It's possible for the price to come to sweep this liquidity. But first of all, I'm looking forward for immediately, I'm looking forward for reactions above, right? I'm looking for reactions above. But let's go to the daily time frame and see. But for now, we have this zone above here and this zone below here that we're looking for we're looking price to react from them. So if you go to the daily time frame, all right, and just try to focus on what you are seeing, uh, you can clearly see from the daily time frame. This is my daily time frame. Let me just move this markup from the weekly so that we're able to refine it as we continue. You see, price was coming in a series of let me start from about here with acceptance above this level. There was an acceptance above the level. Then we have the break of structure here. There, break of structure. Price failed to break above, so we had another market structure shift over here. So we had a market structure shift over here. This is a daily time frame. Break of structure again to the downside. Now market structure shifts to the upside. Like that. Let me remove this weekly place. Remember from the weekly time frame, we said that I was looking this as an area of liquidity. There's some liquidity over here and also above here. So if you look at this particular market, you realize that if the whole of this one was an order block, market already tapped to this order block. So this order block can be actually be refined to this one over here. Again, this large one. You can see it was a good order block because um, actually we have a small sweep of liquidity that happened over here. This is just a sweep of liquidity. You may sweep the liquidity below it. This is a sweep of liquidity. Then the whole of this actually is an order blocker. All of this, right? Is an order block, but we're just trying to refine it. And now we have a zone over here again, a zone of an imbalance where price actually is reacting from, um, like that. As you come above here, also realize that there is more of a liquidity void over here. Price is trying to fill through this imbalance, clearing all the liquidity over here. And now chances might be very high. Going forward, we might be rocketing to this level. Another thing also, let's look at Fibonacci. You see price retrace to this zone. The yellow zone is my OTE. So price gave us a satisfactory retracement. So at this particular moment, um, buying was supposed to be here, but you can see price already retraced satisfactorily to the zone, to the OTE zone. So chance might be very high when looking to get to this particular level. All right, so let's go back now to the 4-hour time frame now and see what we have over here. Now you just mark key levels. These are just entries to mark key levels. You mark what you're expecting at the market and what have you. So you have that breakout structure there. The market structure shift. My bad, it's my 5 o'clock alarm. We have that market structure shift, the liquidity build up, but you can see from this market structure shift, price failed. Price actually failed to close above actually. Like there is more of a see, so just going to be from here high and perhaps some inducements that are being here. And call these are more of inducements. All right, more of an inducement. Prices coming, I think it was reacting on this field thingy of liquidity void. But from here, if I were to use my Fibonacci, my OTE aligned perfectly with the imbalance that is over here. You see, there's a fair value gap over here. There's like a small fair value gap over here. That's where my OTE aligns. So this one just tries to tell me that chances are very high in this DXY might push to this zone before going up. We have chances, all right? And now this one mirrors what Euro USD might be doing, or is might have um, a short-term shorts, or rather, I mean longs, or rather buys. Then we sell. All right, this is actually what I'm trying to look. And my target zone actually is this zone. You see this zone here. I'm targeting the XY to go all the way to 100 to 79. So actually the zone that I'm looking forward for this pair to get to, if you ask me. All right. So the XY with this XY don't go much beyond this, but for the other pair I'll be going through to that level. So let's start with the euro to see come out apart the same thinking. So euro, if you look clearly, tumekuwa been more of an uptrend from that same January. Price has really pushed hard, going up. And we are down. Is that level that has been broken? All right. Let's just try to see. Just try to see what makes sense. That's what I always say. In trading, you just try to make sense what the price is doing. You don't hurry. You don't. You just mark your level correctly. So we've been having that. That was a push to that level. And the low that caused that push is here. You can see price broke below the low. Okay. If you see clearly, price broke below the low that pushed to that one. All right. So if you call this a break or structure in the daily time frame, for example, I mean in the weekly time frame, what happens to this? Um, it become more of a market structure shift like that. Are you seeing that, guys? Beautiful. Now market come to a supply over here that's reacting at this particular supply. Right now we are getting a pattern and structure. So where are we heading to in terms of weekly time frame? So this is a time frame, what we call a draw of liquidity. So this one becomes our draw of liquidity. Because structure, let's say here, might be coming to this level from the weekly time frame. If we go to the daily time frame to refine it even more, it starts also to be very, very interesting. All right, let me refine it. You always refine from what you see here. Let me start from here. This was in October last year. Price was giving us this price gave us this break of structure, right? But finally on December, 2 months later, price came to break that structure and it was once again bullish with a bullish market structure, still the very bad part here with a bullish structure. Market here was still bullish like that. Finally, later on in March this year, from the daily perspective, the bullish market ended again, changed back to bearish to this level, which is our valid draw of liquidity, like that. And this bearish, there's a zone that we're looking at here to be taken. Actually, 20 this market, I believe I was with this market when it was about here. I remember this market spot here. I remember how this buys, we got this buy to that level. So that level has been taken, all right? But now, something also very clearly that I want you to see is a pattern that I always like, a double pattern. I told you that I trade both ICT and transaction combined. I trade in the ICT and in the combined. So clearly, when I see a market like this one, there is a reaction that I'm expecting at this zone. Why? Because see, price came to this level, went up, tried to come to sweep the liquidity below here, failed to go below this, but went above this. All right. So in time of price, it's actually delivering something like this one. I expected a reactions from this particular zone. I probably expected reactions from this particular zone because it was more of a reversal pattern to me, but yeah. So I expected a reversal at least. But now the same pattern here is the same pattern that's been repeated over here. Again, there's a liquidity sweep above, failed, same thing. So I expect at least reactions here to push price a bit to deliver maybe to this supply zone before coming to this clear draw of liquidity. Are you together? So these are zones that I'm also strongly looking at. But for now, uh, price has also delivered us another price action. So let us just look at this zone of supply over here. Like that. And we look how many pips they're there. 100 pips. So you can be clearly looking at something, a scenario like this. Maybe price to sweep this or to mitigate here. And then we go down. You can see already it's making sense from what we from the XY. If you go to the forward time frame, let me remove this first. If you go to the forward time frame, I want us to refine our entry. The forward time frame, shorter time frame, I mean, you can clearly see with this, if you mark this one as your market's break of structure, let me say, let's mark this one as your break of structure to the downside. If you mark this as your break of structure to the downside, like that. And you do Fibonacci. You see where we are. OTE lies about this level, not very far from where we are. But in the lower time frame, maybe 1 hour, okay, let me just mark it down the structure from here so that it will, okay. So if you mark our internal structure from here, you can clearly see there was a liquidity sweep. Nice liquidity sweep. There was acceptance above the level. Are you seeing that? Higher to the order block that was left as the last selling candle around this area. Price came and reacted on it nicely. Um, this is more of a nice reactions to me. If you ask me, a very nice reactions, clearing that liquidity toward this. A very nice reaction. Leaving behind a very big, you know, and price has successfully tapped onto it like that. After this, we had a break of structure above there. All right. So if you ask me, already we have a trade here. Just few confirmations. Uh, but a trade, the best position is to take a trade here. Can have a trade. I can target this zone over here because of my previous experience. Have a nice 1:6 risk reward ratio. So if you are risking, like me, if you are risking something like 5,000, it's not working. Yeah, you get times 6. If your currency is in USC, like mine, so I already see a trade here. As long as confirmations they come in handy, a trade can be made over this place. Let us see in the lower time frame. Let us refine our entry and trade concept to refine our entry Kidogu in the lower time frame. You can see in the lower time frame, this is 30 minutes. Um, it have pushed down. Let me just mark this my break of structure here. This is my break of structure. This is see this market came all the way from this zone. Let me first of all remove this. This has been more of an inducement that has been taken. All right. Then we are done. A zone here that the market actually is reacting from it. The zone over here, market has reacted off it. Currently, market is playing at this very huge FVG. Go to 1 hour, it can be seen clearly. Like that. So if we go back to 30 minutes or 15 minutes, let's see. There's a nice move over here. There is a candle by candle, there's a liquidity sweep, actually reported over here. Then actually we had a retrace back. Now there is a pattern that is ongoing. Okay, this maybe you can see now 1 minute or 5 minutes. Let me see. 1 minute. Oh, I mean, it's too far. Let's leave it to 15 minutes. But if you follow the candle by candle, you see these are last bearish candle, but this one swept the liquidity below it, closes above. Above there's a retest to the zone, then price was already moving. So at this point, uh, maybe I can look for a sweep to this level. A sweep to this level. A sweep to this level. Then a trade can be taken from here up, right? So that's actually what I'm expecting. I can be able to take longs from that level. My stop loss is going to be below this. There. Then take profit. Here. A very nice 1:3 error. That's going to be a trade idea on that. So you put an alert there so that we get notified when the price comes back there. We can take our trade or we can put limit orders. It's going to be the right thing to do. All right. Because I'm looking forward for that to happen. Anyway, let's try to look at some of the time-based liquidity. Let's try to look at the session and see what has happened. So right now, you can see this is the Asian session. It's more probably consolidating. Look at the Asian session. It is consolidating. So you can have manipulation to this zone and now price distribute going as I've told you. Right. Anyway, we wait and see. But that one is what actually I'm honestly and genuinely anticipating in this market. And even for the sake of this, I'm going to put a limit order on this. So I'm going to put a buy limit order on that. That is Euro USD. mm, Euro USD order. Buy limit. So I'll buy when the price is at 1.16 324, like that one. That's my stop loss distance. 14 pips. Then stop loss will be 1.16065. TP will be 1.16790. Why is it not accepting to do it? Seemingly this one does not accept limit order or something. What's happening, bro? Let's try this one. Leave order. Mhm. 3. Stop loss be 1.16065. TP will be 1.6790. So what is the problem with the other one? Was it my mistake or something? Euro USD. Good strong. New order. It is a buy limit. 1.16223. 1.6. One thing I always trade is a stop loss. Always. Why does this one not reduce? Euro USD. Right. So that is it. I've already placed my limit orders there. On to the last pair is gold. See, gold already has part of my as part of the. I don't start from fire. Gold we can just start from the daily time frame and see what has been happening with gold. Gold has been having a very funny price that was over the few days. Look, this was 26th March. So for like a whole 2 months, gold has just been here playing over here. So that's why I don't have to go very far in terms of its analysis. But one thing can clearly look at gold from a higher time frame perspective that gold has been on a downtrend from a higher time frame perspective. I mean from this forward time frame. Kwa sababu gani? You realize that with a break of structure over here, yeah, it broke. It broke structure over here very nicely. There was a break of structure, but that leg that broke structure is here. What happened? Structure shifted. Structure shifted. Like that. But there was just a liquidity that was being taken over there, and it was successfully taken. We had another now break of structure to the downside. Mm-hmm. Okay. And again, those liquidity build up over here. The price handed it down. And now we have another break of structure over here. Break of structure over there. So what do you think? Where do you think we're going? Where do you think? But this actually should be my draw of liquidity. I'm actually looking to get here a draw of liquidity that is at 43.59. Oh, but gold can do as wonders, because currently you can see there is some rejections at this zone, which actually happens to be an imbalance that is happening over here. And also there is a breakup block. Okay. There is a breakup block over here. So we put here breakup block. So we have a breaker here, breakup block. That's your breakup block. So forex actually is reacting over this breakup block, and I mean gold is reacting over this breakup block, and it gave us a good reaction because from the breakup block that was 44.49, it gave us almost 30 distance move, which is a good one because that's good. Mm-hmm. That actually was a good one. On that XAUSD. But now for gold, we continue to go down and see what's happening with it. Mm-hmm. We go to 15 minutes time frame to see something. So in the 15 minute time frame, we've been of course bearish until that level whereby we had a very nice reaction of this zone over here, and liquidity was forced to be taken like that. But again, above it, there is liquidity taken. Now, gold, if you ask me, it is a give me time scenario. It's more of a give me time scenario. Give me time means um, waiting to clearly see where it wants to go. Because yes, it gives a reaction of an breakup block to another sub area of supply over here, and it's seemingly rejecting the area. I mean, or rather respecting the area. So you might buy. You may say that you buy, then just comes and hit the area there and takes you out. Come back to continue going down. Or rather, you might sell. You might sell like this one, only for it to do what? To go and hit the area first, take you out, go down, right? Or buy. All right. And then from the, no, I don't like seeing these gaps in my chart. So from my trading standpoint, again, if I draw a trend line, let me show you something that once you see it, you can see it. You can see if you draw this trend line like that, using what gold has done is that there's this gap that has been left over here, and price might actually be willing to. Okay, this actually is not a break of structure. My bad. Why? Market came here, gave us more of what I can call an, let's see. Oh, that's okay. It goes with nah, yeah. You can see that. Are you able to see that? From where the market came to the top here, or to the below here, it did not go back at least to OTE. Yeah. So it's going to be a breeding ground for this gold to go up, actually. And again, the fact that it's gonna more of an head and shoulder pattern. That's a shoulder, head, another shoulder. Market actually might really go back to test this zone 46.28. Actually, this is what I'm seeing now. Yeah. But now for confirmations, we'll have to go back to 30 minutes time frame. Um, let's see how market reacts off this zone. That's all I can say for now. Yeah, if you are a scalper, those are, yeah, if market closes above, you can go in for buys. But for us who are intradays, let's first of all, let's wait. There should be power in waiting. So let's wait. So that's the conclusion we're getting there. But I think that will be enough for the. Yep, we have a lot of pairs, but forex markets needs time, needs concentration. So you cannot just say that you want to analyze all the pairs at once. That was a great one. It's been quite a good time, 1 hour that we've had over here. So yeah, cheers. Let's keep trading this market. Remember, if you want to support me in this particular project, just hit me on the number that's on the description. Thank you. Bye.